upside down, upside down. Feel the cocky penetrate your left lung. All of your fruits ripe and a blossom. Stand up over your mean a day, I feel lie down. Clean pretty pussy, clean pretty nice tongue. Me a come, skin it out, me come. Second round, lick it out, num. Swimming like your stream till the river come down. Yeah. Money and no nothing, make you a lump sum. Spend for your fun. They put your back on the bed, your head a hang down. Whoop, whoop, whoop. Open your mouth, long out your tongue. Make me push it up in your throat now. Me fuck you upside down, upside down. Fire to your belly, boom, boom, burn down. Me fuck you upside down, upside down. Feel the cocky penetrate your left lung. Me fuck your horizontal, me fuck your vertical. In a bed you want me bitch, dirty gal. Spit on my balls, lick it like a slurpy gal. Then you turn around like the bus terminal. Let me push it on your black way. You say you love it that way. We'll power make your hand spray. Now you in a back pain. Fuck up the bed with crack frame. In your mouth now. We put your back on the bed. Your head a hang down. Whoop, whoop, whoop. Open your mouth. Long out your tongue.
Jim, okay, it's no kid. Happy Friday, man. I'm back. After a week off today, right? I'm back.
Fire to your belly, boom, boom.
I'm back.
Upside down, upside down. Feel the cocky penetrate your left lung.
Hope you guys doing all right, man. Looking for something. Error. Show me error.
You're not down Facebook, Twitter famous, IG smart, everybody love you. Except a few haters. But girl, you're not cater.
We'll start the show soon, guys. I'm just vibing real quick. Now vibing.
But man, I feel love. Everybody like your picture. I wanna meet you so much it hurts. Baby, you're so popular. Girl, I go hate you, but man, I feel love. Everybody like your picture. I wanna meet you so much it hurts. You got a bag of fans, haters as well. Everything you post on the game, I'm on them. Everything you post on the game, a problem. Body perfect, yeah, in a top 10. But I not just know, been a free from when. Every man want on you in a girlfriend. But you could've won up cause you got well. Baby, them stand a chance. Bag a man want she run it like marathon. But you know, so we cool like avalanche. Wish we coulda meet and we have a dance. Maybe book a flight, go to Panama. Oh, we see a big span the media. I question myself if I see that. Real boss, you a leader. Words from Akil and Nadija. Baby, you're so popular. Girl, I go hate you, but man, I feel love. Everybody like a picture. I wanna meet you so much it hurts. Baby, you're so popular. Girl, I go hate you, but man, I feel love. Everybody like a picture. I wanna meet you so much it hurts. Everywhere you go, I bag a man, I look you. Some are saying it.
All right, What's going on, guys? How you guys doing? Happy Friday, as usual. You guys are amazing. Thank you for being here, as usual. I think I did stream once a week this week, but it's been a busy week with the family. I got people down visiting. I have been trading, but not as much. Right now, I think, like I said, we discussed this last week, Friday. The markets are weird, things are going down. But I still believe that we're probably pretty close to the bottom. I'm not saying we're at the bottom yet, we're pretty close. I'll say probably we spoke about this already. We'll evaluate the chart again. Probably 52,000 is where I'll say bottom range is range. I'm not saying that's a bottom, right? But to me, I'll say that's the range. One second, guys. Let me add some audio here. I'm curious. Can you guys hear the music? No, man. Let me see. Curious. You guys hear the music in my ear? I'm not sure. Oh, what's happening? Hey, coach. Just want to let you know that Bradley. Who's Bradley? Oh shit. Oh, the fine. Oh, damn, Marley. I see you, bro. What's going on, man? Okay, I think we're back, guys. Yeah, man. So hope you guys doing okay, man. Happy Friday, man. Yeah, I'm still here, guys. I don't tweet as much as I used to. I'm still here. I'm still here. I didn't leave. I'm still here. Yes. What I'm doing now personally is I'm basically reshuffling everything. All my crypto assets. I'm selling the ones I don't want. I'm adding to the ones I want. I'm not buying NFTs, I guess. I'm holding up the NFTs, right? I'm not doing that much. I'm just basically, I do have some dollar calls going on here and there, but I'm just trying to restructure everything right now. That's kind of what I'm doing. Um, so let me go to ChatGPT real quick, man, so we can analyze the chart to see where it thinks we're going. And what I might do today might be a little bit different. I'm going to erase all my indicators on my screen, and I'm going to ask it, where does it think we're going from here? It's just like I said, it doesn't mean that's where we're going, but I'm just curious. Like I said, I like using ChatGPT. So far, it's been correct. So far, it's been correct. It hasn't been wrong ever since I've been using this stuff. So far, it's been correct. So let me do overall view so I get a much larger view. This is the 1 hour time frame. This is the 1 hour time frame. So let me scan. Let me scan this real quick. Like I said, guys, I'm still here. I'm still cooking. I'm still here. I haven't left. I haven't gone anywhere. I'm just not as active posting like I used to. But what I've been doing, like I said, I've been rearranging portfolio. I've been selling things I don't want anymore, and I'm basically adding onto the projects that are legit, right? The long term ones that I've deemed to be legit. So let's scan the charts. This is the chart right here, right? 1 hour. No, it's a 4 hour. Let me scan this right here. I'm gonna use ChatGPT, scan this thing, then and we'll go from there. Snip. Okay, 1 second. Let me scan this shit real quick. All right, I'm using ChatGPT real quick. Let me just quickly, I'm just gonna say analyze this chart. Give me entries and exits, and also give me probabilities of where the price goes next. Let me correct this. So I do this every time, right? Just kind of give me an overview. I kind of have an idea, right? Just to confirm again. I do recommend you guys using AI tools. Some people might not like it. I like it. It works. I've tested it. It does work for sure. All right, so let me enter. So this ChatGPT's analysis of this chart. Let's see what it gives us. I didn't include any indicators here, so I don't get it. I don't get a bias. I just give it a clear, plain chart. No indicators on the screen, nothing. I give it absolutely nothing. So let's give it this is what I use. The Bitcoin charts plain, and that's it. And this is a 1 hour, right? 1 hour chart. So it's gonna tell me exactly what he thinks is gonna happen here, and based on this information, like I said, I did this last week also. It was correct, basically selling all the pumps. If the price goes to a certain point, expect more downside. So let's see. This is what ChatGPT is telling us. Let me share my screen. There you go. So I scanned a plain Bitcoin chart and asking ChatGPT, what does it speculate might happen to the prices from here, and what are the entries, good or bad, whatever it is. We'll take a look at it. And like I said before, I'll say it again, this stuff does work. I'm not saying doesn't work all the time. All I'm saying is I've tested it. It does work. Yes. All right. So current price is 67.7. Yes. Structural read, clear macro downtrend, lower highs and lower lows from 120,000 area. Recent capitulation wick into 60K. We did hit 60K about 2 weeks ago, about a week and a half ago. That happened, and we did have a bounce from 60K to, I think we went from 60K to like 73, and went back down again to as low as 65. Now we're above 67. We're now compressing. I'm reading what the ChatGPT analysis of the charts, it's telling me to do. So basically saying now we're compressing between 7,000 to 70,000. Okay, 1 second here. Make sure audio works. Perfect. We're good to go. Bear with me. Okay. So now we're compressing between 66,000. Basically, we're ranging between 66,000 to 70,000 in the short-term range after the breakdown. So basically, with the breakdown from 120,000 down to 66,000 to 70,000, that's our range. We're just bouncing within that range, right? 70,000 to 72,000 was our prior support. Now it's resistance. So we were bouncing above 70,000 to 72,000 for a while, and we broke below that. Now we're ranging between now that's 70,000 now has become resistance. So we're having trouble breaking above 70K. I think we've tried, I think 4 to 5 times within the last 2 weeks, and we've always gotten sold down, right? So 60,000 to 62,000 is a major liquidity sweep. So some people might say it might be a good idea to set some buys around 60K. But from what ChatGPT was hinting at a week ago, was basically setting your buys at 48 to 52,000. Actually, 48, 52,000, 57,000. That was your range for you to set your buys at. So yeah. So probabilities next 3 to 5 days. Okay, that's pretty cool. So in the next 3 to 5 days, this is not a fact. This is what ChatGPT is telling us might happen. There's a 60% chance of a bearish continuation. Range resolves downward. Sweep recent 60 to 62K low. Possible extension down to 57 to 55K. So it's just saying continuous downtrend. A 60% chance we see 60 to 62K within the next 3 to 5 days. That doesn't mean it's going to happen 100%. 60% chance is not 90% chance. So who knows? And there's a 30% chance we get a relief bounce to resistance, which is at 70 to 72K. A 30% chance. That's not that much at all. That's a very low chance. So it's saying we could get a relief bounce to about 70 to 72K, maybe a spike towards 75,000, then probably rejection if we do touch 75K. The true reversal is if we claim above 75,000 and we hold it. If the price gets above 75K and we hold it, then that's a good signal, right? What else? It says this would also require a strong volume and also a strong structural shift. So this might not happen. This might happen. Who knows? But I think it's very interesting to see how things do play out, right? But like I say, it's very difficult to say. I think like I said, we do need strong amount of volume to push the price above 75K and hold. It's not that hard, guys. Right now, the liquidity is low, volume is low, which means it is easy to move this price up if they want to do it. And I don't think they want to do it yet. I think the whales are accumulating at this price and they're not going to push the price up for a long time. That's what I believe. We might range, guys, I think if I had to guess where we go, I think we'll range from low of 48,000, high of 70K. That's a large range, but that's the range that we could be in for another year, guys. Yeah, that's what I think. We'll see though. We'll all be able to be witness. So, key levels. The key levels are identified by ChatGPT are 75K is a major breakdown level, which means we need to break above it to call it an uptrend officially. 70 to 72,000 is a major supply zone, short zone, which means there's a major sell wall. There's a major sell wall at 70,000 to 72,000. Major. 66,000 is our range bid. Excuse me. So price at 66K signifies that we are at a very major mid range, right? 60,000 to 62,000 is a major liquidity sweep, which means if we go to 60K, there's going to be a bunch of liquidations, guys. We probably won't bounce from there. I think a lot of traders get liquidated. We might go down, maybe wick to 55, maybe, and come back up again, right? So the major supports is at 55,000 to 57,000. That's the major supports. So what else? Trade setups. So basically, this gives you entries, exits. If you want to place a trade, these are the numbers telling you. Basically, it's telling you to place a short at 70K. Your entry at 70K or 72K. Place a short right there, and it's telling you where to take profits at, which I love. Take profits at 66K, 62K, 57K. So you could set your limit orders, right? Set your limit orders at 70 grand to short it. That might be a smart thing to do. Then risk reward about 2 to 4 ratio. Best play if price taps into resistance. And short setup breakdown play. Entry 65,000. So short play number 2, right? If you want to short another entry here, if the price, if we get to 65,800 with volume, you could place a trade there. That's the momentum trade. All right. So long, if you're gonna place any longs, basically only long if liquidity sweeps and reclaims. So basically, you could set a long here, but I mean it's risky a bit because this is a major liquidity zone at 60K. But if we go to 60K to 62K, there's a potential to get a quick gain from this, right? And it gives you stop loss, take profits, all that stuff. And what else? And what invalidates bearish bias? If the 1 hour closes above 72K, follow through above 75K, higher highs and structural shifts. Until this happens, rallies are for shorting. So basically, until we see a clear hold above 75K, every rally we get from here is a short the rally move. It's a short the rally move. Don't assume that the momentum is shifted. Only if we break above 75,000 with volume. That's probably the only way for us to see a clear structure change. And that's basically the market overview, man, for the market right now. Like I said, I mean, the market has been ranging, man. It's been, it's probably been better for people. Let me look at all the indicator here. So, I mean, I'm using the smart money concepts and supply demand indicator. Let me add another one. Let me add we have a lot of work to do, guys, when it comes to what this market is doing. We have a lot of work to do, because the reason why I say this, because we have I want to add this thing. Give me 1 second. Let me close the show real quick. Okay, we got some. It's fine. The reason why I say this, because if you look, look at the 4 hour, right? If you look at this, right? Look at all this supply zone. These are major sell zones, and there's many of them. There's major sell zone here. There's one here. There's one there. There's one there. That's 4, 5, 6. That's just supposed to get to 94K. 6 major supply zones for us to break on the upside. That's not gonna be easy. Now look at this. Have you noticed that there's nothing under? There's no demand under. I mean, of course there is, but I don't see nothing is developed yet. There are demand zones on the. Let me take a look at the weekly. Okay, the weekly chart does show us where the demand zone is, right? We got demand zones at 12K. Yeah, I'm not. Yeah, if that happens, yeah, crypto's probably done at least for like the next 4 or 5 years, man. If that happens, but we do have a major demand zone at the bottom. We have major demand zones, range of 59K to 65. Major demand zones from 33K to 43K. But that's on the weekly time frame. Okay, on the daily, there are some demand zones from 58 to 61. But I mean, just take a look at this chart right now. You see major distribution happening. Accumulation, then dump, then we can see accumulation here again, possible dump to 50 something, we'll see. But it's hard to tell. The market's weird. I would say that a lot of whales are in control, and they are the ones moving the markets. They're the ones that decide where we go from here, right? In this market condition right now, the best thing for you to do is a couple of things. I've been saying this for a long time. If you have money, you're buying dips. You're buying dips on what you like, what you like, what you believe in, what is popular, what you think might do well in the future. If you don't have money, you sit on your hands and do nothing. That's only if you have skin in the game, right? If you do have skin in the game and you don't want to spend money, you sit on your hands. I'm doing both. I'm buying a little by little. I'm not going crazy, and I'm literally sitting on my hands too. I'm doing both. Or if you don't have money and you don't want to sit on your hands, you have to go grinding, man. We're talking about going back to trenches, looking for opportunities there. Or I'm not saying airdrops are dead. I'll say it possible. There might be some opportunities through airdrops again. Let me show you where you could go for that. Let me go that real quick. It's called CryptoRank.io. I haven't done this in a while, guys. So what I'm doing right now, it's been a very, very long time. This website does give you opportunities for where the next airdrops are going to come from. The only thing is you never know, right? You never know. You don't know. I mean, it's what it is, right? I mean, I would say, right? We're all humans. Human beings don't change, which means human behavior repeats. It rhymes and it repeats. So even though airdrops might not be as lucrative right now, that's going to change in the future. It always does that, right? So here, this is the website. It's called CryptoRank.io. Okay. And gold is above 5K again. But yeah, so right now, all this is all fueled by. Oh, how can I close this? There we go. Excuse me. All this is fueled by the uncertainty in the markets. We're talking about the war. U.S.-Iran war, tariff war, Trump's tariff got shut down today by judges in the Supreme Court. Different things are interesting, guys. So we don't know. It's very interesting. So yeah. All right. So let me. So this is the website. This is the website here that kind of tells you where airdrops are. So you click on funding and scroll down. So in the last 30 days, there's been about that's volume. I don't want to, and that's not dollar value. I want to say that that's not accurate. Let me see. These are all the projects that are still raising money right now, even with all the downtrend. New Witty raised money. They raised about $11 million from CMT Group. You have, look at Novig from Panther Capital. Just 2 days ago, they raised 75 million Series B. Wow. So, I mean, I haven't come in a while, right? These opportunities where you could come here and look at what these projects are doing and see if they have any tasks to complete. Because if they are, okay, I'm going to click on this one. They raised about 75 million. That's a lot of money. A DeFi project, total raise $100 million. Wow. Yeah, multi-coin capital. Okay. Yeah. This is interesting. So, let me see something real quick. Didn't sign in. Sign in with Google. Let me try to sign in real quick. I want to see something. Because sometimes if you click on this project, it tells you once you click on the projects, it tells you if continue. It tells you if they're tasked to perform, because the best time to do airdrops is when everybody says dead. So what I'm trying to see now, okay, I've signed in. I want to see something. I'm curious. I'm very curious here. Overview. Let me see. Anytime this project raises money, there's usually rewards at the back end, right? So this project is called Novig. Novig is a platform that functions as peer-to-peer sports prediction exchange. Interesting. So it's a prediction market. Key principles: trading. Participants have the opportunity to accept existing market odds, and so it's a prediction market. This might be a good one to look into because there's a possibility that you might make money from this. I just, like I said, I just found this now. I mean, this, like I said before, if you don't have a lot of money to play and you want to, try to at least get some exposure, this might be a good way. It's good directions to go. Let me see if the website is live. Let me see. I'm curious, man, because if you don't have a lot of money, you go interact with this kind of project. They raise what, $100 million, bro. If they raise $100 million and they have a working product and they have points, it's a point system, and you can do all that. You can get there early, start playing with it early, which I probably will. If their website is up, I might look at this stuff, man. So this is their website. I know I just went from trading to prediction market. I want to show you guys opportunities to make money on here, man. So let me just take a look at this shit real quick, and we'll get back to our regular scheduled programming. Yeah, so it's slow. Events. Let's see. So I don't think it's live yet. I don't think so. I don't think it's live yet. I'm trying to open up another page and see if it's just me or maybe this site like maybe it could just be this new. This project raised 100 million. Is that brand new? They have no users yet, which means if I don't think it's active. Let me see. No, I don't think it's live. Which means what you could do is follow their Twitter page, join their Discord. So once they go live, you are the first to interact with the platform, which means opportunities to make a lot of money. Guys, don't forget, man, like we airdrops could make 20, 30, 40, $50,000 just by being early or more. So I'm going to follow them on Twitter now, and just keep that in my back pockets. Let me my Twitter's not awake here. Let me go back 1 second, guys. So that's kind of what I suggest, right? Go to cryptorank.io. I mean, 29 people. This thing is so brand new. They guys, anytime, see this, guys? Oh, sorry. Anytime you see Panther Capital funding a project, there's gonna be an airdrop. It's almost guaranteed. So these are all the investors, right? Joe Montana, yeah. So there's gonna be a token launch for this thing. For sure. I would recommend you guys definitely to take a look at the site. This is what I used to do, but not anymore. But I like to come back to this sometimes just in case I find an alpha like this one. This is one right here. So them different ones. Let's see. It goes all the way down. Look at how much they raise. I'm looking for protocols that raise a good amount of money, right? Let's go to page 2. This site is so brand new. 3 million to 4 million. This is brand new, man. Like this is 2 days ago. Yeah, no, that's the only. Okay, this one, that's the only project that's raised that much money. $100 million, man. Just 2 days ago. Tether, Relay, Gold.com, Penguin Securities. Yeah, that's for now. That's probably the only one I'll take a look at, man, honestly. Right? I'm sure you kind of scroll through this, right? But that project, I'm gonna keep an eye on it for sure. I'm gonna try to follow them right now. Where's there? They have a Twitter page. They have a website. I have a Twitter page. I'm gonna follow them. I don't care about this. And then what I'm gonna do right now? Novik. I'm gonna go to my Twitter page and just follow them real quick. I don't do airdrops anymore. I don't do that anymore, right? But what I would say is these kind of projects I like because it is brand new. It is so new. Win big or no big, available iOS. Join Discord. We're building the sports prediction markets that Vegas fears. Wow, backed by Pantera. This is 2 days ago. 2 days. Yo, this is alpha, man. So if you're in this space right now, you're getting some alpha from me, man. You're getting some alpha from me. So I'm going to join the Discord right now. Join the Discord. I'm going to join the Discord. Verification. You wanted to verify. Securing boss.gg. Okay. Yeah, I'm just trying to join the Discord page. unlock the features. What? Verification. Maybe I need to do on my computer. But I joined the Twitter page already, so any information that comes out, I'll be here to jump on it. But yeah, this might be the only protocol I'm gonna focus on and just kind of wait and see what happens. They launched their website. We're trying to be there early on that. Yeah, man. So like I said, guys, if you're struggling to make money, you come to cryptorank.io, go to funding round, and just kind of scroll down and find which projects raise a good amount of money and see what these projects do. You might be able to qualify for some nice rewards if you're early enough, right? Let me see. So guys, like I said, as of right now, the markets, according to ChatGPT, on its analysis, what it's saying is Bitcoin probably goes down 60% chance that we go down to 52,000 or 55,000. Then a 30% chance we get a dead cat bounce into 70 to 72K, possibly 75,000. But if we don't break above 70K and hold, we're probably going to go down to 55 to 52,000. That's the range. Those are numbers. And it's saying basically, if you're trading the hourly charts, your entries are you want to take a nice long a Bitcoin at 60K, or you want to take a nice short when Bitcoin touches 70, 72, or 75. Those are the numbers, right? And the mid range is 66,000. That is your middle range right there. And plus, we are in an accumulation zone right now from 65,000 to 70,000. That is our accumulation zone. We're in the middle. We're gonna, if we do range, which I think we will, we could range from 66,000. Sorry, from 66,000 to 70,000 for a while, guys. That's possible for a month, 2 months, 3 months. Who knows? But that's the numbers I got from ChatGPT. And like I said, guys, very, very easy. All you have to do, right? All you have to do is go to any charts, whatever it is. Just scan your chart, guys. Scan your charts, scan scan your charts and post it in ChatGPT. It doesn't matter what it is. It could be any 1 hour time frame, 4 hour, daily, weekly, whatever it is. Whatever ticker, Bitcoin, ETH, Solana, whatever it is, scan it, post it in ChatGPT, and you're done. And of course, ask it. The prompt I use is once I post the screenshot into ChatGPT, I ask it, analyze these charts and give me entries and exits. Give probabilities of where the price goes next. It will give you entries, exits based on longs, based on shorts, the best long, the best shorts. It will tell you everything. It will tell you where to take profits, where to set a stop loss, take profit 1, take profit 2, take profit 3. It's just beautiful, absolutely beautiful. So all these tools that we have in front of us, man, we have to use it. Yes, so guys, I don't want to stay too long today. There's not too much to talk about. Let me see if we have some videos for you guys, man. Let me check real quick. Let me see. I want to see if I have some YouTube videos of any new indicators. Let me see. I'm trying to find it. Just give me a second, guys. In the meantime, enjoy your music, enjoy the vibe. I'm just going to check for if we have any. If I have any. If I have any indicators to take a look at, man, anything new. So let's just
spread them so widely. Caribbean guy won't die for me. She have to die for me, yeah. Bounce your body out, we bounce you out.
Give me a second, guys. I think if it's one song. Yeah, this is more stuff. Just give me a second, guys. I'm trying to find any indicator for you guys. Give me a second, guys.
You're not down Facebook, Twitter famous, IG smart, everybody love you. Except a few haters. But girl, you're not catered. Baby, you're so popular. Girl, I go hate you, but man, I feel love. Everybody like your picture. I wanna meet you so much it hurts. Baby, you're so popular. Girl, I go hate you, but man, I feel love. Everybody like your picture. I wanna meet you so much it hurts. You got a bag of fans, haters as well. Everything you post on the game, I'm on them. Everything you post on the game, a problem. Body perfect, yeah, in a me top 10. No, I not just know, been a free from when. Every man want on you in a girlfriend. But you coulda won up cause you got wealth. Baby, you must stand a chance. Bag of man want she run it like marathon. But you know, so we cool like avalanche. Wish we coulda meet and we have a dance. Maybe book a flight, go to Panama. Oh, we see a big span of media. I question myself if I see that. Real boss, you a leader. Words from Akil and Adija. Baby, you're so popular. Girl, I go hate you, but man, I feel love. Everybody like your picture. I wanna meet you so much it hurts. Baby, you're so popular. Girl, I go hate you, but man, I feel love. Everybody like your picture. I wanna meet you so much it hurts. Everywhere you go, a bag of man, I look you. Some a send the money, them a look a boobs out. When you wake up a man in as usual. Tell a bag of message in your inbox. Man, I send the flowers under your window. Pastor get it and say hallelujah. You know wait, see the dick and a run come. Tell you something good that everybody wants some. Bag of man want she run it like marathon. But you know so we cool like avalanche. Wish we coulda meet and we have a dance. Maybe book a flight, go to Panama. Oh, we see a big span of media. I question myself if I see that. Real boss, you a leader. Words from Akil and Adija. Baby, you're so popular. Girl, I go hate you, but man, I feel love. Everybody like your picture. I wanna meet you so much it hurts. Baby, you're so popular. Girl, I go hate you, but man, I feel love. Everybody like your picture. I wanna meet you so much it hurts. I wanna meet you so much it hurts. Popular, so much it hurts. Popular, so much it hurts. Popular.
So I got one for you guys, okay? Let's check it out real quick. Let's check it out.
Lassen Sie Ihre Bank nicht einen Teil Ihres Gewinns einstecken. Sparen Sie bis zu 80% Ihrer Gebühren mit Saxo.
This indicator is awesome. It gives you impulse signal where the momentum is suddenly increasing and a breakout is probably going to happen. This is one of the best indicators on TradingView for scalping strategies and day trading strategies. So it's suitable for time frames like 1 minute, 5 minutes, 15 minutes, up to 1 hour. This indicator can be used for any type of trading strategies, whether it is trend following strategy, reversal strategy, or breakout trading strategy, because it gives you a signal when there is a sudden increase of momentum in the market. I will completely explain this indicator and how you can use it in trading, so make sure you watch this video until the end and let's get started. Before I add the indicator, if you like my contents, please support the channel by liking the video and subscribing to my channel if you haven't subscribed yet. All right, on TradingView platform, here we click on indicators and we search BB Impulse Indicator, this one, which is written by Lazy Bear. All right, this is the indicator. And as you can see, it is added here below the chart. As you can see, we have a histogram and the bars are sometimes above the center line and sometimes below the center line with different colors. As you can see, this indicator is built based on Bollinger Bands and it is created by John Bollinger, who's the one created the Bollinger Bands. If we go to the settings of the indicator, you can see that we have settings for length and multiple multiplier similar to Bollinger Bands, and similarly by default the length is set at 20 and the multiplier is set at 2. We don't change this because this is optimized for most of trading strategies, but here we have another two settings which are alert level, which is set at 0.24, and impulse level, which is set at 0.4. Before I close the settings, here we go to the style tab, and here we change the histogram to columns so the bars will be better visible on the price chart. All right, so this dashed line here is alert level, which is set at 0.24, and this solid line here is impulse level, which is set at 0.4. So depending on the size of the bar, if the bar passes the alert level or impulse level, we can have a signal about increase of momentum. When the bar passes the alert level, the dashed line, it is alert signal that the momentum is probably going to increase, and when the bar passes the impulse level, the solid line here, it is impulse signal, and it tells us that we had a sudden increase of momentum in the market. But not any impulse signal means that the price is going to further move in that direction. For example, for this impulse signal that we had here, which is a downside signal, you can see that the price didn't go down considerably, but for this impulse signal that we had here, which is an upside signal, the price advanced after that considerably. So the context of the signal is important. All that the impulse signal is telling us is that we had a sudden increase of momentum, but deciding on if the context confirms further movement of the price after that needs more analysis, which I explain it now. But before that, I'm proud to announce that I have published a book, The Art of Price Action Trading, which is a complete guide to price action analysis. The link is in the description, and you can get it later if you want to master price action trading. All right, getting back to the indicator. So as I said, when we have impulse signal, it only tells us that in that time period, we had considerable increase of momentum. But it doesn't mean that definitely after that, the price is going to further move in that direction, like this case here, which is not worth of trading. But this one here, for this signal, it was definitely worth of trading because you can see that the price advanced after that considerably. Two of the main situations where you may get a false signal like this is when a reversal is happening in the market, like this case here, and another one is when a pullback happens in the market, especially deeper pullbacks. First, let me explain reversal situation, and then I will explain pullback situation. In times that a reversal is happening in the market, it is very common to have exhaustion move, which is a sudden increase of momentum alongside with sharp advancing or decline of the price, and usually with high amount of volume. During this downtrend, when we identified that the current trend is down, when we got a bearish signal like this, the first thing that comes to mind is that this was a pullback, and the pullback ended now, and the price is going to decline more, like these bearish signals here. So you must have a reversal identification in your system, even when you're using a trend following strategy, so you can avoid false signals like this, where a reversal is happening in the market. One good measure for probability of a reversal is divergence. Let's add RSI to our chart. This one, relative strength index, and see if RSI is showing any divergence or not. You can see that following this downtrend where the price was making lower highs and lower lows, here when the price made lower low, you can see that RSI made higher low. This is a bullish divergence, and it tells us that probably a reversal is going to happen. So at this point, when we got this bearish signal, we don't enter a trade because there is a probability of reversal in the market. Even in terms of price action, where the price is in this range, you can see that when this signal happened, the price couldn't break the previous low, and here tight consolidation. Just see how many candles inside the body of this candle. After that, a downside gap, but not any considerable momentum, as you can see. So here we could easily avoid this false signal. But here, for this bullish signal that we have here, this is happening following a bullish divergence, and it tells us that now we have a sudden increase of momentum, increase of upside momentum, but we need more confirmation. We can use price action concept for further confirmation. For a bullish divergence, we mark the high of the pattern and we wait to see if the price can break above this high or not, because if this high is broken, which is the last lower high following this downtrend, it tells us that the structure of the downtrend is already broken. So even higher probability now to have a reversal and starting of an uptrend. Here you can see that this candle is closed above this high level. So the reversal here is confirmed. And in practice, we could enter a long position at this point. And you can see how the price turned to an uptrend after that, making this position very profitable. All right, so now you learned how you can avoid false signals that are happening during reversal situation of the market. But as I said, we can also have these kinds of impulse signals during pullbacks. And now let me teach you how you can avoid them and instead take high probability signals inside a trend. First, let me close RSI and then we add another indicator. Here we click on indicators and we search MACD. This one, moving average convergence divergence, and we need to change its settings. So here we go to the settings of MACD, and first here in the inputs tab, for the fast length we set it at 100. For the slow length we set it at 200, and here for signal length we set it at 50. And then we go to the style tab and we remove MACD line and signal line because we only need the histogram for identifying trends of the market. So we can further validate the signals to be sure that they are happening in the same direction with the current trend of the market. This MACD with the settings that we made will help us with trend identification. When the MACD histogram is above the center line and green, the market is in an uptrend. And when the MACD histogram is below the center line and red, the market is in a downtrend. So when the MACD histogram is above the center line and green, we only focus on bullish signals. We don't take bearish signals because they are against the current trend of the market. So when MACD histogram is green, the focus is on bullish signals. But we don't trade only based on this because, as I said, this shows that we had increased momentum in this time period, but entering a trade depends on the context. At the moment, the trend is up. So the first condition is okay. But what about the price action? You can clearly see that the price is in a tight consolidation period here like this. And although we had sudden increase of momentum here in this candle, but the price couldn't break the previous high. And even after that, there is no upside break of the price. And then here, the price went down. But we don't pay attention to this breakout or these bearish signals that we have here because they are against the longer term trend of the market. So here we could easily avoid this false signal that we had here. If we entered only based on this, that would be a losing position. But with price action analysis, we didn't enter any long position here at this point. All right, moving on the chart. Here you can see that we had a bullish signal, but what about the price action? You can clearly see that the price is in a tight consolidation period like this. And at this point, where we had a sudden increase of momentum in this candle, the price didn't break the high, but later after that, here you can see that the price could successfully close above this level. So the buy signal here is confirmed, and in practice we could enter a long position at this point. And you can see that this was a profitable trade. Here another long position signal happened at this point. And when we check the price action, we can see that the price is in a consolidation period in this period. When we had this increase of momentum, the price didn't break above this range until here, where we got a candle that is closed above the high of the range. So in practice, we could enter a long position at this point. And this is also a profitable trade, as you can see. And we do this similarly when the MACD histogram is below the center line and red. This indicator is a perfect choice for breakout trading strategies, especially breakout during trends that can provide you low-risk trading opportunities. But please pay attention that you need to manage your risk properly because losing positions are always part of the game and you cannot avoid all of your false signals. There is a risk management strategy that is called 1% rule, and it is one of the best risk management strategy that you can use. By the help of this risk management, you can minimize the effect of your losing positions and make consistent profit in the long run. I have a complete guide on this. The link is also placed in the description, and I highly recommend you to watch it because without a proper risk management, you cannot become a consistently profitable trader. All right, that's it. Thank you for watching.
So I'm gonna let the videos keep playing. I might keep it all for like an hour, maybe. They do have a lot of indicators there for you guys. So you just make sure whenever the videos are live, just get a pen and paper and write it down, all that stuff. And there's a lot of information here available, man. Like I said before, just make sure you guys don't get shaken out of your bags. We are gonna go up eventually, but there is some money to be made on the downside. If you watched the show from last week, you said I said 6% chance we're gonna lose 70K, basically sell the rally. We went low to 65, right? Yeah. So let me play some more videos for you guys. I need to go get my day started here and with the little girls, with my daughter, and let me see if I can find some other videos for you guys here, man, that I like. I like this guy's videos, man. This guy's very good. I like his videos. He makes good videos.
Their AI platform helps me detect any department's IT.
Let me do this. Let me see if I can find some on somebody else. I got a lot of good YouTube channels on it, man. But I watched like only two channels. That's it. Actually three that give very good information, very good details that help you in your trading journey. But top 5 AI indicators. Ooh, tested and ranked. I like AI stuff, but I think it's fascinating.
Bars, you can see exactly how often each cluster appeared. Cluster number 3 occurred this number of times.
Let me see if this guy's a playlist. Not that many videos, just 34, right? Let's see. They have playlists. Trading, genius.
This is Mark Minervini, born to a family that struggled to make ends meet. A high school dropout who left school in 8th grade with no clear path ahead. He started with nothing but the burning desire to break free from financial struggle. He studied successful people, becoming obsessed with one question: how did they do it? With no college degree, no Wall Street connections, and no formal financial background, he achieved what most consider impossible: turning a small trading account into tens of millions with systematic precision. To be specific, he averaged 220% annual returns for 5 consecutive years, achieving a mind-blowing 33,500% total return. That's insane. In 2021, he proved it wasn't just luck by winning the US Investing Championship again. This time with a 334.8% return. He applied a systematic approach he calls SEPA, Specific Entry Point Analysis, that focuses on buying high and selling even higher. Traditional value investors criticized Minervini for buying expensive stocks with high PE ratios, calling his method dangerous and unsustainable. But Minervini proved that wrong through his consistent performance and systematic approach. Meanwhile, Mark believed that proper technique combined with disciplined psychology could be taught to anyone. By 2020, 11 of his students ranked in the top 20 of the US Investing Championship. Now, if you're like me, you're thinking, what's his secret? Here's the thing. There's a ton of material about Mark out there. Books, interviews, videos, courses. But most of it is scattered, incomplete, or buried in technical jargon that's hard to follow. I spent days and days going through everything and filtering out the noise. I've condensed decades of his knowledge into this video and I'm giving it to you absolutely free. So if this adds value to your trading journey, hit that like button and drop a thank you in the comments. It really helps the channel grow. Let's get straight to it. Mark says, "My starting point is always to have the wind at my back. That means I only buy stocks that are in long-term uptrend. So catching a wave like a surfer, therefore going with the tide and not against it. It means that you only look for entries in the stage 2 portion of a chart cycle, the green area we see here. Mark says during the other 3 stages, 1, 3, and 4, you are either losing money or losing time. Minervini discovered through studying thousands of winning stocks that 95% of the biggest gainers made the majority of their profits while in stage 2 uptrends. This isn't opinion, it's statistical fact. The best time to buy a stock is when it's making new highs, not when it's cheap. Let me show you exactly how this works with his famous stage analysis. Every stock goes through 4 predictable stages, and Minervini only buys in stage 2. Stage 1 is the neglect phase, sideways consolidation where the stock builds a foundation. Stage 2 is the advancing phase. This is where all the money is made. The stock breaks out and trends higher with institutional accumulation. Stock 3 is the topping phase, volatile distribution where smart money exits. Stage 4 is the declining phase, where most retail investors lose everything. Here's where most traders get it completely wrong. They see a stock that's dropped 50% and think, what a bargain! But Minervini proved this thinking is a recipe for disaster. Instead, he looks for stocks that have a strong run higher and are building what he calls a volatility contraction pattern near their highs. The logic behind the volatility contraction pattern, or VCP, is surprisingly intuitive. Imagine a stock that has already made a strong run higher. At some point, it pauses, and instead of continuing to surge, it begins to move sideways, consolidating its gains. What's important is how this consolidation unfolds. The first pullback is usually the widest. Price might retrace around 20 to 25%. Then, as the stock stabilizes, the next decline becomes noticeably smaller, maybe around 12 to 15%. A third contraction follows, often limited to single digits. Eventually, pullbacks shrink to just 4 or 5% before buyers step in again. Each time this happens, price swings become tighter and tighter. At the same time, trading volume often fades. This combination sends a clear message to the market. Selling pressure is being absorbed. From a behavioral standpoint, it makes sense. Early profit takers have already exited. Weak holders have been pushed out during the larger pullbacks. What remains are more confident investors who believe in the stock and are willing to hold through minor fluctuations. As volatility compresses and volume dries up, the balance between supply and demand quietly shifts. By the time price approaches the upper end of its consolidation range, most of the available supply has already been consumed. When price finally breaks above that range and volume returns, the move can be powerful. Demand overwhelms supply, and the stock often enters a new phase of acceleration. Many of the strongest historical winners showed this behavior before their biggest runs. In Minervini's words, learning to correctly identify a true VCP is essential because nearly all of his favorite chart patterns are built around one idea: volatility should contract before a major expansion. Let me show you how this works with a real example. This stock exhibited the classic VCP signature. The initial pullback created a 28% range from peak to trough. The second contraction narrowed to just 16%. By the third pullback, volatility had compressed to a mere 6%. This final consolidation zone became the launching pad for the next major move. Notice how the tightest price action occurred right before the breakout. This is what Minervini called the pivot point. What makes this pattern so reliable is the volume story. As price volatility contracts, trading volume typically decreases. This creates a state of equilibrium where selling pressure has essentially evaporated. When demand finally exceeds this diminished supply, you get explosive results. In this particular example, the breakout led to a 465% gain over the following 10 months. Another powerful case study involves Netflix. While the market was still recovering from the financial crisis, Netflix was doing something extraordinary. Notice how the stock had already advanced significantly, then began building this tight consolidation pattern. Most traders would say, "This is too expensive, I'll wait for a pullback." But Minervini recognized this as an institutional accumulation. The VCP shows three distinct contractions. First 15%, then 10%, then just 5%. Each pullback gets smaller while the stock holds near its highs. This tightening action indicates that supply is drying up, while demand remains strong. It's like a coiled spring building pressure for the next explosive move. But here's the psychological challenge. You must be comfortable buying stocks at or near their 52-week highs. This goes against every human instinct. Most people want to buy cheap stocks, thinking they're getting a bargain. But as Minervini says, there's usually a good reason why a stock is cheap. The real money is made by buying the strongest stocks in the strongest sectors during the strongest market conditions. Now let's examine Minervini's three-step process. finding the optimal entry point, setting protective stops to limit risk, and determining the perfect exit strategy to maximize returns. But first, I want to thank our amazing community. We selected the user who helped another community member, and we're gifting them 1 free month of Flux charts, because that's how a community should work, by helping each other out. Please reach out to our email to claim your free subscription. Now, if you haven't heard about Flux charts yet, this is the platform I use every single day for my trades. It completely changed how I trade. Flux can run screeners on up to 15 tickers and timeframes at once, so instead of flipping through charts, it tells me exactly where my setups are happening. They have backtesting tools to build custom strategies and test them against years of market data in seconds, so you know if a strategy works before risking any money. Here's the best part. 90% of their indicators are completely free. Plus, you can use Flux charts even with the free version of TradingView, which is huge because you can use multiple indicators simultaneously, avoiding TradingView's 2-indicator limit. They also host daily live trading classes teaching strategies, risk management, and trading mindset. Can't join live? They have a full library of recordings. Click the link in my description and use this code to discover the fantastic promotion I got for our community. Alright, let's get back to the video. First, we need his trend template. This filters for stocks in confirmed stage 2 uptrends. The stock must be above its 150-day and 200-day moving averages, the 150-day above the 200-day, the 200-day trending upward for at least 4 months, current price within 25% of 52-week highs, relative strength rating above 70, preferably 80s or 90s. This template immediately eliminates 90% of stocks from consideration. You only want the market leaders. Next, we look for the VCP pattern. The entry signal comes when the stock breaks above the VCP on volume surge, typically 40 to 50% above average. This confirms institutional participation in the breakout. Stop loss goes just below the final contraction low, usually 7 to 8% from entry. This gives enough room for normal fluctuation while strictly controlling downside risk. Mark emphasizes the importance of capital preservation. The numbers in this table explain why cutting losses quickly is the cornerstone of successful trading. A modest 10% loss requires just an 11% gain to break even, but let a position deteriorate to a 50% loss and you'll need a massive 100% gain just to get back to square one. This asymmetric relationship between losses and recovery gains explains everything. Small losses are easily overcome with your next winner. Large losses, however, create a mathematical prison that can take months or even years to escape. The psychological impact is equally devastating. After a 50% loss, traders often become desperate, taking excessive risks to get even quickly. This typically leads to even larger losses, creating a downward spiral that destroys accounts. By keeping losses small and controlled, Minervini maintained the flexibility to capitalize on opportunities. This is why he says, not losing big is the single most important factor for winning big. Concerning the position sizing, Minervini never risks more than 1 to 2% of his total account on any single trade. Here's how it works in practice. Let's say you have a $100,000 account and you want to risk 1% per trade. That means your maximum loss on any position is $1,000. If you find a stock breaking out at $50 with a stop loss at $46, your risk per share is $4. To stay within your 1% rule, you can buy a maximum of 250 shares. $1,000 divided by $4 equals 250 shares. This might seem overly conservative, but it's what allows Minervini to survive losing streaks and stay in the game long enough for his winners to compound. Remember, he expects to lose on 60 to 70% of his trades. Without proper position sizing, a few bad trades in a row could wipe out months of gains. The math is simple but powerful. If you risk 1% per trade and lose 10 trades in a row, you're down about 10%. Painful but survivable. If you risk 10% per trade and lose 3 in a row, you've lost 27% of your account and need a 37% gain just to break even. Now here's his selling strategy. When the stock moves in his favor, he doesn't just hope and hold, he uses trailing stop loss. The stop loss can be moved up when the stock rises by 2 or 3 times the initial risk, and profits should be locked in